Well, a NerdWallet report out just this morning found that over 1/3 of people think they'll be in credit card debt forever. This as US consumer debt jumped nearly $24 billion in November. That's according to a report by the Fed this week. Well, let's take a deeper dive into what's happening with credit card debt with Sara Rathner, NerdWallet credit cards expert and writer. Thank you for joining me this morning. Very
Thank you.
disheartening to imagine that 1/3 of people think they're going to be in debt forever. But break down the types of debt that we're talking about here.
So we covered not just credit card debt, but also other forms of borrowing like mortgages, student loans, and auto loans.
And so with that in mind, then, which is the sort of debt that's really been plaguing people? When we look at that sort of $1 trillion balance sheet of credit card debt that people have, it's not just how much they have, but how long they're also having it. So break that down for us and what came out of the study that surprised you.
Right. So what surprised me really was that credit card debt is up 16%. And that's at a time where interest rates are very high, an average of just over 22%. Compare that to 2 years ago when credit card interest rates were around 17% on average. That's a lot of extra money that consumers are paying into those interest payments.
And so how much of that is just down to what we've seen with high interest rates and the Fed versus something that's really been building up over time and how people have been managing their savings?
It's been tough over time for a lot of Americans because incomes are just not keeping up with the cost of goods. Costs of goods have gone up to 20%. Incomes are just up only 12%. That's since 2019. So the last couple of years, people just haven't been able to keep up.
And the rate at which indebted Americans are able to pay off their debt, how much has that changed because of high interest rates?
It is harder to keep up with debt payments. And so consumers are, like you cited the stat early on in this segment, that many consumers feel that they will be in debt forever. And so those interest payments just become another line item on the household budget that'll just stick around, much like utility payments or rent. And so that does create a hardship where money is going into interest instead of into something else that would benefit each consumer.
So Sarah, is it mostly an income problem or is it a spending problem when we think about how people are managing debt right now?
So income is part of it, of course, and that is combined with the increasing costs of the goods that we need to buy. A lot of times, credit card debt is imagined as the result of frivolous spending, but we've actually found that many Americans take on debt just trying to afford the necessities and just trying to make ends meet. And so it's not necessarily frivolous spending, it's spending on things like food and transportation, housing, and medical costs.
So when you think of things like buy now, pay later, how much does that concern you into how people are spending? Because it used to be people would think it would be big ticket items, but more and more we're seeing people also spending it on the essentials. What does that mean? Because that isn't something that shows up on your credit score or your credit report until you default on it. How should we be viewing how buy now, pay later is being used and the types of purchases that people are making with it?
Buy now, pay later can be a helpful tool, like you said, for those major purchases. If you have to unexpectedly buy a new appliance for your home, something like that, it's a way to spread out the pain of those payments and line them up with a few of your paychecks instead of just one fell swoop. So it can be helpful, but it's also something to be cautious about because you can enter into multiple buy now, pay later installment plans around the same time. And that's money that's deducted from your bank account. So if you have multiple plans going on at once and you've got other bills to pay, you might get in over your head really quickly.
So Sarah, for a lot of people, a lot of the data showing the consumer is still resilient. How resilient would you say they really are based on some of the debt that's still on their balance sheets right now?
Obviously, debt is very stressful. We found that Americans with credit card debt, 50% of them roughly, are stressed out about that debt. But it could be that stress could be a motivating factor in finding ways to pay down that debt as quickly as your budget allows. And it's January. A lot of people are setting New Year's resolutions when it comes to their money. If you have credit card debt, this could be a good time to sit down with your financial statements and see where you stand today and how much you're paying in interest and make a plan going forward to stay motivated and prioritize those debts and pay them down as quickly as you can.
Indeed. Certainly not the time to stick your head in the sand. Have to face the music indeed. Appreciate you joining us, Sara Rathner, NerdWallet credit cards expert and writer. Thank you so much.
Thank you.